But let me welcome on board Rakesh Rawal, the CEO at Anand Rathi Wealth, joining in on the show to talk about how their quarter went by was and what really is the vision going forward. Rakesh, hi, morning. Good to have you on the show. Firstly, let's talk about the fact that you've already surpassed your FY24 guidance in Q3 itself. Tell me what's the look ahead for your company in terms of a strategy for the next 2 to 3 years.
We've always maintained that there is an inherent growth potential of in the range of 20-25% in our business, and powered by the fact that 10 to 12% is given by God in terms of the market growth of our portfolios. So my the stand is the same. That, between 20 to 25% growth in this business is there for the taking for many, many years to come.
Wealth management companies we've seen across the segment have performed very well with a rise in NIs, the increasing number of large deals as well that we've seen in FY24. Are we going to see the same rate of growth for FY24, or would you say come FY25 there could be some moderation perhaps?
Well, like we've grown in the range of 30-ish for the last couple of years that we've been in the market, and we projected 2025 and achieved 30. This year also we project 2025, and hopefully we should meet that and try and better the expectations. Probably, I think the industry is very well poised. There is no reason to believe that there should be moderation. I think that the opportunities are massive, and every company should endeavor to do very significant growth this year as well.
Okay, good to know. Let's also understand what the outlook is when it comes to the progress in capturing opportunities in small towns, in particular the Tier 1 centers. What kind of response have you seen?
The response has been phenomenal. Wherever we've been able to set up shop, and I think the basic thing is that there is a inherent need to get a 12 to 14% return. That inherent need is not changing whether it is a person from a mid-town or a big town. And if you have something that can meet that need for the gentleman or lady, then the response is going to be very good. So as long as you have a service which meets the needs of a customer, and the needs are constant. I'm a consumer products man, so I don't see why Lux is less in demand in Ranchi or more in demand in Bombay. I think it has a due market in all places.
Good morning. This is Vinny joining in the conversation as well. You spoke about how the industry is expected to grow. Now, there are reports that are also suggesting the active AUM is expected to double. So in terms of what is the AUM guidance that you would see for FY25, what are the triggers that you see for your company, and in the next couple of years, where do you see the company's AUM headed?
Well, this year's guidance is 72,000 crores, which is a 21% increase. Yeah, and as I said, that I don't see any reason why 20-25% growth in AUM shouldn't happen for many, many years. The trigger for the growth is really money. And last year, for example, we gathered 7,000 odd crores of new monies. We are going to do better than that this year, and with years even better. So I personally don't see why 20-25% is at the normal business risks being put aside. I don't see why we shouldn't achieve it.
What's the rationale behind the 165 crore buyback? If you could just start with that in terms of other news.
Well, we are a business which is cash generating, right? And the need for cash is rather low in terms of any other capex or any of those things. And therefore, the cash has to significantly basically go to reward the shareholders. And we've been increasing our dividend payouts over the years. And we also believe that if we do some buyback, that's another way to reward the shareholders. And we are doing the maximum allowable to us.
What about in terms of your numbers? Just on a sequential basis, it's a bit muted. But so in the short-term trajectory, at least for Q1, do we expect a muted trajectory? Is that mainly because of the volatility in the market, or are there any other factors that could be impacting anything in the near term?
So we have a different strategy to approaching a year. Yeah, we believe that the first quarter should be the best, and therefore increase the probability of meeting your year-end numbers rather than wait for the last quarter to run and meet targets. So our belief is that, hey, if we have to do 100 for the year, then try and do 26, 27, 28 in the first quarter, and that then also creates an organization which has less anxiety and more happiness. And our belief is that if we have happy people within, happy clients, there's sustainability and passion, and therefore the probability of meeting targets goes up dramatically if we do that. So my expectation is that in the first quarter we should do hopefully better than the proportionate number. Yeah.
Okay, great to then have you on the show, Rakesh. Thanks for taking the time out.
My pleasure.